DSCR loans. What are they and how can they benefit you? Now, what DSCR stands for is debt service coverage ratio. So what it is with these loans is that these are more so for investors looking for properties that can cash flow. That is going to be the main requirement when getting a DSCR loan. And it's looking at the cash flow of the property rather than the income of the actual borrower yourself borrowing the loan. Now, we're looking at loans from between $100,000 to $2 million. This may depend on the lender. And this is, like I said, for investment properties only, for cash flowing properties. The more the property can cash flow, the more that you are able to even qualify for a DSCR loan. Now, one thing is that these purchases can work for rate term finances and cash out refinances. And you don't need any of your own personal income or employment info. That's one of the big benefits about a DSCR loan. You could get a 30-year fixed loan, or you could get an ARMS loan, which basically would mean you're paying low interest, but that's not always positive. 80% loan to value ratio, especially with the cash out refinance. What else do we need to know? Good for first time investors, and you need a minimum of a 620 credit score. Short-term rentals are allowed, and one thing about DSCR loans is that there is a prepayment penalty. Now, this is just a very, very, very brief explanation of DSCR loans, and I'm not a mortgage loan officer. Matter of fact, I actually have a buddy, his name is AJ, and I'm going to put his information in the description below. He knows a lot about DSCR loans. Matter of fact, he's the one that put me on to DSCR loans. I wouldn't know anything about it if it wasn't for him. So shout out to AJ with Apex Mortgage. And this is Bradley Court of eXp Realty signing out. And we'll bring you some more content talking about other mortgage options in the future. Even though I'm not a mortgage loan officer, it's still my duty to inform y'all. Take it easy, y'all.